Morning, Steve Free in Chicago with the morning grain comments. Well, happy Thursday. Yesterday we saw a lot of numbers that the market had to digest, but the market traded lower and continued lower overnight. I think three things are going on in the grain markets. Number one, I think the European model suggests that we're going to see better weather across the Midwest, a little bit drier pattern. It comes out twice a day. The American model, though, is still wet, but it comes out every 6 hours and hasn't been quite as good as the European model as far as predicting 2-week Midwest weather forecast. So we might get this corn crop planted. Yesterday, we saw one private estimate of corn acres at around 85 million acres. That's down from the USDA's 92.8. And that seems to be kind of a low number. Their crop is 1355 million bushels versus the government's 15 billion bushels. So the market really didn't react to that. I think in part because on June 11th, I don't think the USDA is going to bring acres and yield down that much. And on June 28th, I don't think they're going to come out with acres that low. So it may take a while for the market to figure out just how many acres of corn the farmers don't plant this year. They raised bean acres about 500,000, which is probably in line with some expectations. And they lowered wheat acres about 800,000 acres. So again, when we look at their carryout numbers, they show over 1 billion bushels for beans and wheat, which is too much for that market. And right now, you would have to say a corn carryout is probably around somewhere between 1.2 billion but 1.5 billion, but we probably won't see that number until at least August. We also note that some private people are taking down demand. Maybe as next year as much as 300 million bushels on the feed side, and maybe 50 to 100 million bushels each year for corn exports. We did hear yesterday, number one, that a hog feeder in the U.S. Southeast bought maybe as much as 10 corn cargoes from Brazil. That's a hedge against lower corn supplies in Illinois, Indiana, Ohio, and the potential higher costs of railing Western Corn Belt corn across Chicago into the Southeast. It could be cheaper to bring in the Brazil corn. We also note that Mexico, for the first time, bought a cargo of Brazil corn. Again, the rhetoric overnight is that on Monday the president will impose the 5% tariffs on Mexico. The talks continue to move forward, but he's not happy with the results yet of the tariffs. The Chinese, we still don't have a trade with them, and so that offers some resistance today on Export Sales Day because of the fact that we're probably not seeing the buying, number one, because of the tariffs in China, but number two, the almost 90-cent rally we've seen in corn from contract lows because of the wet weather is probably keeping buyers on the sideline. So all in all, I think that grain prices are pulling back from their recent highs because number one, the weather might improve. Number two, the demand for exports is lower than what we need. And number three is the money flow is moving out of the grains back into the equity markets if the Fed decide to lower interest rates. One final reminder, tomorrow's National Donut Day, so go out and have a donut. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.